Well, this is Smart 24 and welcome to Financial Markets. Financial Markets comes to you Monday to Friday from 10 to midday, and then my colleague Marcelino comes up from midday to 1. And well, my name is Julius Nsubuga, and we're going to be having a very good time looking at how the financial industry is basically performing, the economy and the stock market. And just remember that most of the time we actually want to, as entrepreneurs, we want to find out really what's happening. What are the numbers in the economy? What is happening? What are some of the business indicators? So all these make us basically have very, very good instincts and also make us decide quite well. So it's very important to note that these numbers are always important. So we're going to be looking at the interest rates and then the GDP of Uganda ever since 2014, and probably try to see how it's basically been trending, and then we shall also look at the other economic parameters, including the stock market later on in our second part of the hour. But have a very, very wonderful time as we peruse through what is happening in the world of finance. And so just recall that you can actually follow us on Smart 24 TV, on Facebook, on Instagram, and as well Twitter. And you can also follow me as well, Julius Nsubuga, on Facebook and Twitter. And then probably we can have further rapport there and conversations and feedback from you, because the feedback is always important. Then we can always be able to give you the best of what we have in the world of business. So right now, let's get started with what is up with the interest rates in Uganda. So let me just get over there to the screen, and I hope that we can basically have a very wonderful time. So right now, looking at the Uganda interest rates ever since the year 2014 up to 2022, you can see that it is something to really be noted over there, because you can see that the interest rates ever since 2013 have gone down steadily, as you can see the curve over there. And so, well, as you can see in 2014 and in fact 2013 we had a very, very high inflation coming to 2014, and 2014 we had a kind of a flat change in the interest rates, and then the interest rates kind of went up in 2016, as you can see over there, and went down progressively from 2016, went down to about 10. And then 2018, it was a bit stable. And 2019, we had it a bit go up and then remain the same for quite some time. And 2020, we had it actually begin to go down ever since the lockdown was basically, or probably the COVID-19 pandemic came to be. So in 2020, we can see that the interest rate right now is at, on average, 6.5. And well, it is quite something to note, because in about 6 years ago, about 8 years ago, about 6 years ago in 2016, you had the inflation hit over 16%. And now you can see it at 6.5%. And well, you can actually also see that we have the lowest interest rate in 2022, just right after the lockdown, because, I mean, well, the CBR rate is basically a very important number and also figure in the world of business and also in the economy, because it determines the cost of money in the economy. So we had that kind of, we have it kind of low, and this is because the government of Uganda had it in mind to reduce the interest rates so as to make money more accessible to the business community and to business people. So it's very important to note that while we have a lower interest rate, well, it is very good for the economy, and also a very low interest rate may not really be good for the economy because it may, in the other sense, make money very, very accessible and very cheap, and therefore it can lead to a hyperinflation, and that is not something that we may really want. But 6.5 is a fairly good figure as per now, based on Bank of Uganda, because I mean the Bank of Uganda is the principal printer of the money, and also it overwatches the economy. And depending on the performance of the economy, the Bank of Uganda is able to set that interest rate, or the central bank rate. Just recall that the central bank rate is the rate at which the central bank lends to other commercial banks, so that you and I, at the end of the day, as business people, as entrepreneurs, can be able to access money at any one point in time from commercial banks. So that is basically the trip. Actually, you will find that the interest rate is noted 6.5 by the World Bank. They won't say central bank rate because that is the base rate. The commercial banks only kind of mark it up a bit, and then they can be able to lend it to you and I because they also borrow it from the central bank. So that is it for the interest rates, but it is very important to note that kind of trend coming from as high as over 23 in 2013, and now down to over 6.5% in the last 8 years. That is quite something to note. And well, that is it with the interest rates. Let's look at Uganda's inflation. Ever since last year, it is very important to keep our eyes on the inflation in the country, and most especially in these times. You know, the COVID-19 pandemic has come to disrupt quite a number of things, and among them is the economy. Let alone the individual businesses, but the economy as a whole is kind of affected and disrupted, and therefore it is the time for us to basically keep our eyes on the numbers both in our businesses and also the numbers in the economy. So looking at the inflation rate from April 2022 up to January 2022, April 2021 to January 2022, these are about 4 quarters from last year, and you can see that you can see that kind of downward trend right from April. The inflation in March was over about 3.4%. That's the headline inflation. And by the way, headline inflation, we mean the aggregate inflation. It's the overall inflation, including energy and also food. And so it is very important to note that this is a very important parameter. So it came from 3.4% in March last year, and still remained a bit at that level in late March, and coming to April, it basically dropped down up to about 2.9, as you can see right there in April 2021, and it rose up a bit, up to about 3.1% at the end of April, and in July, and in June actually you had it at about 2.7%, just like you can see over there. So it is that the inflation from July actually went down further, up to about 2.2% in the month of August. And it remained that way until in October, when it fell further up to about 2.1%, as you can see right over there. And it went further it actually increased up to about 2.6%. and that was kind of a sharp rise in the inflation. From 2.1% up to 2.6%, that's quite something to note over there. So it then went to about, in about December, you had it at about 2.9%, just like you can see over there. And then in January 2022, it is at 2.3% as of January. And we are still in the first quarter, by the way. We haven't yet finished the first quarter of the calendar year 2022, and that is why you have it over there in January 2022. So we can't wait to see in April how it will be at the end of the first quarter of 2022. So the inflation is basically it gives us a clue on the changes in prices of goods and services, and most especially the headline inflation, which normally includes the energy inflation and also the food inflation. Core inflation, of course, is also a very important parameter because, well, it basically excludes, most of the time, it excludes the inflation coming from food and energy. And that will be a very important parameter to know. Also just note that as we are basically having the inflation right now at about 2.3%, not until the new figures are released, we can say inflation is basically at its low right now. So when you see the interest rates at 6.5%, and you also look at the inflation rate at 2.3%, well, you can see that indeed the economy is having a balance. It's having a balance. Yes. So we don't have a very, very high inflation, and we don't have a very, very low inflation, and we also don't have a very high interest rate, and so don't we have a very low interest rate. And when you look at actually other African countries, well, their interest rates they are quite high, including Zimbabwe is at 60% as we speak. But those numbers, that is as of 2020. We had Zimbabwe's inflation at 60%. Sorry, interest rate at 60%, and which was quite something to note. However, let's watch the inflation rate as the year goes by and as the quarters go by, and then we can see, how to go about making very good decisions, both for our businesses and also for our economy. But it is also very, very important to note that as you can see the inflation at 2.3%, it also means that probably that is why you have a lower interest rate at 6.5%, because then there you are actually safer off putting the interest rate a bit lower when probably there are no clues or probably signs of a hyperinflation anytime soon. So those actually go hand in hand, and we can see that it is quite something to note. It's a very important trend to note over there. So let's now also have a look at what is Uganda's GDP growth rate ever since 2012. It is something that we had some bit of feedback from some of you, the viewers, trying to find out how has Uganda's GDP progressed ever since in the past probably say 10 years. So in the past 10 years, this is what Uganda's GDP looks like. I think you can see that there is a kind of onward or probably upward progression in the size of Uganda's GDP. So you can see that in 2012 you had the GDP at about 27 billion US dollars, the size. So you can see that it's actually the lowest in 2012. So we can say that Uganda's GDP has basically grown if you look at the past 10 years and now where it is right now. But of course, keeping other factors constant, we have a lot of issues to do with our economy. There's so many imbalances. There's so many things to basically criticize about the economy. But at least we can say that we are not actually over yet. At least we're somewhere. Yes. So in 2012, you had the GDP at about $27 billion, and then in 2013, you had it at about $29 billion. Just recall that the GDP is a very important economic parameter because it tells us it's a very good measure of the economic performance and activity in the economy over a given period of time. And so GDP represents the gross domestic product, and that is the total amount of goods that is produced in an economy over a certain period of time. So in the past 10 years, this is what it looks like. So in 2014, you had our GDP a bit of increase from $29 billion, about $29 billion, to about 32.5 billion US dollars. That is 2014, as you can see just right over here. And so we also had about, that figure in 2014 go down slightly. And sometimes these figures rely on events that happen. So if you can basically trace an event that happened right in 2014 that led to the economy going down a bit, then probably you can try to predict or probably try to find and trace what really happened. But keeping other factors constant, you can see over there that you have the GDP size coming down just a little bit from 32.5 up to about, say, 31. So we had the GDP size of Uganda going down a bit. And by the way, if you actually would wish to find out, when we say 31 billion US dollars, you have to, basically you have to multiply that by the current currency in Ugandan shillings. You have to multiply that with over 3,600 shillings. Then you can get the real figure. You have to multiply 36, or probably if you say 31 billion, you have to multiply it by 3,600. So you have to multiply 31 billion US dollars, 31 billion by 3,600. Then you can get the real figure over there. That's the size of Uganda's economy. And well, when you look at from 2050, it went down slightly, and then 2016, it went down further. I think we can also relate that in 2016, Uganda's GDP went down because of a few reasons here and there. And some of the reasons that probably we can attribute to that is the elections. The elections most of the time have a way they affect the economy. And in 2016, you can see the very implication of the political environment on our economy in 2016. That in 2015, you had the economy actually at about 31 billion US dollars, go down up to about 29 billion US dollars. So it's quite something to note. So when we say the political environment has a way it basically impacts on the economy, this is the evidence. This is the evidence. And so you always have that actually. You will always have the implications of the performance of the other social, economic indicators and activities happening in the economy will affect on the economy itself. So you can see over there. And then you began to see a recovery, probably you began to see the GDP rising up a bit from about 29 billion US dollars to about 31 billion US dollars. So I think that this was a very, very important trend because, I mean, down from 2016, the election year, that's about 6 years ago, you can see that you had it actually begin to increase. And then in 2017, it increased to about $31 billion. And then in 2018, it increased further to about 32.5 billion US dollars. And well, I should say that right from 2016, as you can see, it's been an upward trend. Uganda has been growing. Its size has been growing at a very, very exponential rate. It's been growing progressively from 2016 up to 2020, as you can see right over there. So this is what shows that probably we had a very impressive economic performance in terms of GDP size growth rate. So it was quite something to be noted. So in 2018, you had the GDP increase to about 33 billion US dollars, and then probably you had it increase up to about 35 billion US dollars in 2019. Well, in 2019, you can see there that the economy increased by about by a very good percentage as well, up to about 35 billion US dollars. And in 2020, from 2019 to 2020, you can see, I think it grew further, and the growth prospects were very much basically promising up to 2020. Not until the COVID-19 pandemic hit, and now you had to see that downward trend from 2020. So it hit, in the past 10 years, the GDP size of Uganda has hit its highest in 2020 at about 37.5 billion US dollars. Isn't that quite something to note? And then you see it actually going down further. However, I wonder if it were not for the COVID-19 pandemic, probably we would see that higher and going a bit. We would see the economy even growing bigger and bigger. But because of the COVID-19 pandemic, the lockdowns have been quite many, so we have seen the implications. Now you can find a very good correlation between health and also the economy. Yes, when you have a very good healthy population, well, you have, of course, the economic activity and productivity at the end of the day. So, but when you have most of the population redundant and not much economic activity going on, these are the results of that. So you see that in 2021, you had the economy going down further. It went down further up to about 36.5 billion US dollars. And then from there, it climbed down further up to about, in 2022, as we speak, it went down a bit from 36.5 billion US dollars to about 35 billion US dollars. So it is also very important to note that while we see an increase in the size of the economy, well, most of the time it doesn't really necessarily mean that it is development. Well, economic growth and development are two different things. Growth will only give you size, probably quantity. It will basically show you the quantity. But development will show you both size and also quality. For example, it's not just enough for us to have very many schools in the country, but what is the quality? That is what economic development always questions. And so therefore, as that is in the question, we can see the GDP is it's a bit of promising in the next few quarters, and let's just wait and see what is going to happen in 2022 with Uganda's GDP. But the Bank of Uganda expects the economy to actually increase by about 6.5%. Is it something that probably we may see happening? Well, let's just go for a very short commercial break. I'm going to be right back with more.